Thanks, everyone, for coming back here to another episode of Money in the Bank with Frank. Today, we have Reggie Ozeroglu with us. Reggie is a small business. Well, actually, I take that back. He is just what would you say you are?
Business owner, janitor, all those things that come along with being a business owner. So
I see that all the time. Like, my friends and clients are like, what would you say you do? I'm like, you can call me janitor. Just pay me.
Yeah,
as
long as it's coming in.
All pecuniary matters. Fancy word, right? Pecuniary
HR. It's all under one hat.
So Reggie and I work together, similar parts of the industry. I do financial planning. So with that financial planning hat comes like quarterback role, right? So
Sure.
I'm handling everything for small business owners from their 401k plans, retirement plans, all the way through individually managing the money and helping them figure out, what terms of loans or health insurance or life insurance and coverages are best. And then I will pull in someone like you when I have questions about health insurance. While I have the license, it's so funny. People just assume because you're in personal finance, you know the answer to every single thing. And the one thing that I found out that was super important that I learned at the first place that I worked, not a sponsor, I'd tell you the name and then you can pay me, but use your tools.
Right.
Learn. If you don't know the answer, reach out and find out. And so what I've been successful at and what's helped me scale my financial planning practice is to work with people like yourself. I have a gentleman in New York that does point of sale insurance, like life insurance, and he handles things every day. That's all he does. Like, are you going to buy a life insurance policy from someone that is just picking it out of thin air or somebody that actually knows what's going on in the industry? Same thing with health insurance. This is the one thing that I find really fascinating about getting a new job is people just, do you have health insurance? And then I'll take it. They don't care, right? The real decision.
After salary is the most requested item of employment. So
Yeah. So how do you say, starting from the beginning, tell us about yourself. Give us your story.
Well, I got started actually, like many people in the insurance business, 27 years ago. Basically, I'm going to do this till something better comes along. I know hundreds of people in insurance. I only know 3 that actually meant to be in insurance, and I am not one of them. But, it became a good career. And so I started out for, if I said it, a major health insurance carrier, selling for them, and moved on into the dental side, became state manager in Oklahoma for a dental carrier. Did really well with that until they decided to sell off, and corporate merger world being what it is, we didn't really see eye to eye on some things, and so I decided, I'm going to try my hand at this agent broker side and see what that's like. That looks easy. Mm-hmm. And everybody said, well, it'll probably take a good 5 years to get going. And I was cocky in my younger days, just maybe for you, but it took about 5 years. And, we really have established, in my opinion, a nice agency and have a very good client base.
That's what it takes for any small business owner. Overnight success usually takes at least 4 years.
Right.
And you need that cocky, arrogant attitude to actually start off. I mean, I did the same thing. I left one of the big brokerage firms. I left Merrill. I'm not afraid to say it. Mm-hmm. I left Merrill and started my own shop. And that was hard, because you don't have the name behind you. But what it takes a while for people to realize is they're not hiring the company. They may have gone to that company first because they wanted credibility. Right. But after the fact, it becomes, why do I work with Frank? I work with Frank because I work with Frank.
Relationships.
Since I left Merrill, I started my own firm and I went independent, and I've changed from one servicing platform to another, and I've carried pretty much every single one of my clients with me from side to side, because once they realize that they're dating you,
right,
they're dating you.
Yeah, they figured out who they came to the dance with. Right?
Yeah, so. It takes time. It takes time. I'm sure it did, just like you. And
sure.
So when you, how did you grow it from there? So you started off small business, young guy, and then it's a long sales cycle. How did you not take the dirty money? How did you help like, how did you grow the practice properly?
Well, and for me, it was all organic because there's really two ways to do it: either from scratch or to buy a book. And I didn't have enough money to buy a book, so we started from scratch.
Explain that. Buy a book.
Buy a book, basically you can either finance or come to the table with some money and buy an agent or a broker's existing book of business. Usually, when you do that, you expect that agent or broker to hang around for a couple of years and help bridge the gap. Introduce you to all the clients. Now you're the trusted advisor. Or you can do it like I did it and just, go out and knock on doors, make phone calls, and hopefully somebody talks to you.
Right.
And eventually enough people did talk to me, but as far as, not getting that dirty money, I just try to do everything, what I felt was the right way. And, if you take care of people and you take care of their needs, the rest of the business sort of takes care of itself. And that's what I found was my key to success. So,
What's the name of your company?
Employee Benefit Advisors.
Right. Okay. So the one thing that I'd like to point out about employee benefit advisors, just in general, employee benefits, and you mentioned it a little earlier, health insurance is just one of the many benefits that people look for whenever they move into a role, right? They want a 401k plan, they want health insurance, maybe they want life insurance, they want, family leave, they have all these different things, but every one of these things comes with a cost.
It sure does.
Right. And so, when somebody says that I want to make X amount per year, well, a company's going to be paying a lot more than that if you actually throw in the ancillary benefits. So how do you break that down when you're having the first conversation with someone that's having their very first health insurance plan, and let's say it's a small, mid-sized plan somewhere up to like 50 lives. What's your protocol? What are the things that you think that they should check into, what they should know before they come to someone like you?
Well, I think that, the reason they're coming to somebody like me is because there is a lot of uncertainty, especially after 2010 with ACA coming into the marketplace. There was a lot of uncertainty as to, do I have to comply with this, or what do I have to comply with? So a lot of what we do now isn't always just examining health insurance plans or dental plans. It's talking to companies about compliance. In fact, it's more about compliance than it is about the benefits sometimes. And so that's really what we have to look out for the client.
So dialing in a little bit more than that. So let's say that you've got a 50-person organization. Would it be fair to say that there's probably one, maybe two people that are handling human resources, like someone that's handling payroll is probably similar to the same person that's handling all of the benefit things like that?
Yeah, I think that's fair to say, yeah. There's usually one person, and even if they haven't outsourced payroll, they're doing it in-house, there's a lot of responsibility and burden on that person.
So it makes it a lot more difficult whenever they have one of their employees that calls up and says, I have a problem with my 401k plan. We'll call Fidelity or Vanguard or Schwab or whoever has the 401k, right? And what is it the same situation with health insurance? Do they reach out to you first, or would they reach out directly to a carrier?
We want them to reach out to us, and hopefully that's what sets us apart from some of my colleagues, that we don't give them the phone number to the carrier right away. We try to help in research. Now, some things HIPAA and all that, you can't get into all those things, but for the most part, we want our clients to call us, and that is how the protocol goes. They call us, and then we tell them, hey, you need to go here, or we can handle this for you.
Okay. And so you're basically also adding to an additional resource for a human resource department.
Correct.
Yeah.
Yeah. But, you mentioned something earlier about, when you take a job, as far as, it's the salary, but there's so much more that goes on with that. And, one of the things that we offer, and, you can get it depending on the type of third party you have, but we offer it through a service that we purchased, which is called a virtual paycheck. And what that does, basically, there's a bunch of numbers that get plugged in, but once a year at open enrollment, you give the employee a sheet that says, well, you make $50,000 a year, but your health insurance is costing the company another $6,000. Here's your dental insurance. Here's your life insurance. Here's our contributions to 401k. Here's payroll taxes. And so that bottom line number is much greater than what the salary is, and just to show them that there is more value to what the company is providing to you as an employee. We do appreciate you, and so here's all the numbers that go into your job. So
that's amazing, because that offers an insight into transparency that most people don't see. Like, I like to say that if you really want to start working on your political allegiance, becoming a small business owner will kind of motivate you in certain directions based on the fact that you finally realize how much it costs to actually employ somebody for a say $50,000 a year job.
Sure.
Do you know that number? And I'm not holding you to it, but do you know approximately what that number would look like, or do you have an approximation of like what additional, like if is there a multiplier based on somebody's salary?
I don't know about a multiplier, but to use your example, excuse me, of 50,000. I mean, it's probably about $58,000 a year once you add in payroll taxes. And if you just did health insurance, and they didn't do, all the bells and whistles, and depending on the company size, you're not required to do some of those bells and whistles, right? But I mean, on a small business side, you're probably on a $50,000 salary job, you're probably looking between $58,000 and $60,000 that the employer's putting out annually.
Wow. And so if you multiply that by the 50 employees.
Yeah.
That's a lot.
You're the finance guy, so you do the numbers. So.
Yeah. It's funny. It's like when I was got my undergraduate degree in history, and people say, "Oh, you must be good at dates." Like, no. Not necessarily.
Not necessarily.
The whole
right?
idea was actually the whole point of what happened, not necessarily when it happened.
Yeah. My history minor was a result of, I need to take some more classes to continue to perpetuate this cycle of professional student. So
That's right. Oh, that's great. So coming into health insurance, more, drilling down a little further into health insurance. So there's a few different pieces of health insurance. Like, okay, I've got health insurance. What does that mean? I mean, like, does that mean 100% is paid for by the company? Like, so there are different factors, right? You've got premiums, you've got deductions, you've got out-of-pocket expenses.
right.
What does one look at if they do have the opportunity that they actually have more than one plan? Like, what is it that
With it kind of drives that decision making, it really, I think, is their own personal health. Because if you're talking about deductibles and out of pocket maximums, that's kind of the driving factor there. So deductibles and the out of pocket determine the premium. So the higher, the more liability you put on the employee, the lower their premium is, and conversely, it's the other way around. So if somebody, if you have a known expense coming up in the new year, and you know that you're going to have surgery, or you're having a child, for example, you probably want a little bit to pay a little bit more to get that lower out of pocket, and then at the next open enrollment you can adjust. But generally speaking, your own personal health and how much you intend to use that benefit or to use the health insurance is what's going to drive your decision up front on the cost.
Wow, that brings me up to just reminds me of kind of a similar situation when it comes to like home refinancing. Totally separate, completely different topic. But if you're going to be somewhere for less than 30 years, why would you buy a 30-year mortgage?
Right.
Right. You buy the one closest to where you're going to be because you're going to save money on the interest rate,
Right.
on the interest payments.
So
yeah, same thing. So if you're going to use your health insurance, if you know that you have a family history of bad, then you probably want the best one you can.
Yeah, and I mean, if you're a 20-year-old male and bulletproof, you're never going to go to the doctor. Why would you pay for the $1,000 deductible when there's an HSA available that you could, take advantage of if you had the wherewithal to put something away in an HSA account.
Right. Love those. I love HSAs. I think that over time, that's really kind of the solution if you're able to nail it early enough.
Right.
Because I forget what the numbers are, but it's something to the effect of like $200,000. Once you get to a certain age, it's like you're going to be spending out of pocket.
That's
somewhere
right.
around $200,000.
Yeah, it's going to get you eventually.
Whether you have insurance or not.
There's a reason why insurance gets more expensive as we get older. So.
Oh, that's great. Okay, so we've got those types. Now you've got different types of health insurance, and it used to be that HMO, you don't want it. It's like their job is to say no. Then you have the PPO, and you've got gated, non-gated. What is the not to go through all of them, but the difference between HMO, PPO?
Yeah, so really PPO is the dominant type of plan that's out there in the marketplace now. HMO back in the late 80s and 90s was kind of the chic thing because you had the $10 baby. That's all you had to pay was your copay. But then they kind of got a bad rap as well because they became very controlling. Obviously, to manage care, HMO, health maintenance.
Yeah, it's definitely not. It's not health insurance.
No,
it's managed healthcare, right?
Right. So you had these gatekeepers, that sort of stood in your way and took away your freedom, right? Yeah, I want to go to the dermatologist. No, you can't. You've got to go to your primary care first, and then they'll tell you have to go to the dermatologist. So people didn't like that approach. But what they did like about HMOs was the lower cost. So they were willing to give up some of those freedoms to get that lower cost. But over time, as things have changed, healthcare claims costs, pharmacy costs, those types of things, HMOs now are not necessarily, in fact, in very few cases, are they less expensive than PPO options. So the PPO, the preferred provider organization, still had a network because it incentivized providers to become part of that network by giving them a certain contract. But as long as you, the consumer, use those providers, well, you got that discount that you had. But even with the PPO side now, you see that the cost containment just isn't there, and costs are skyrocketing on both sides. And unfortunately, with the PPO, you do have that freedom, but you don't always have that network. So the networks are becoming skinnier and skinnier. Do you want the lower cost option? That's fine, but you're going to get this network within a major carrier's PPO. Now, do you want to have broader scope? Sure. Well, it's going to cost you extra to do that.
So we really, I'm going to throw Sohail into the bus here. Sohail and I had a conversation. We were actually working on open enrollment for the marketplace, and when we were going through all the different plans, we saw that like Baylor Scott and White has their own, right? And if you're here in Dallas, there's plenty, right? But if you're, if you like me, you travel to different states, you may be out of luck.
Right. So,
that's an option.
You only have an emergency or urgent care option if you're in New York, for example.
Yeah. And then what about the one thing I saw in the marketplace that really confused me was they have different levels, right? They've got the silver, they got the gold, they've got platinum, but some of the silver plans are better than the gold plans.
Yeah. Well, and again, in the individual marketplace, it's unfortunately, it is a marketplace in which it doesn't make a lot of sense because, like you said, silver sometimes looks better than platinum. But really, the amount of choice on the individual side just isn't there like it used to be. So, when people come to me, even with a very small group, 2-3 life case, they're like, well, should I do the marketplace or should I do this? And I'm like, well, there's advantages if you do the group side. And the first advantage is you're going to have about 60 choices versus 5 or 10. And then, you have other, tax benefits possibly of doing it on the business side that you cannot do on the individual side.
Right. You could pick a cab-like plan, use the deduction, so on and so forth.
And in the individual marketplace, too, obviously is driven by ACA law, which, if you don't have a special circumstance to enroll mid-year, you've got to enroll during that period of time, just like Medicare. That's kind of what it's become. Whereas with the group side, if you do own a business and you have 2-3 lives and you want to start something in August, if you have a legitimate setup, then sure, you can get that started.
I just remember going through our scenario when we were working with you. And again, keep in mind, I have my health insurance license, but again, you never know. Everything changes so fast now, right? It's like you have to work with somebody that actually keeps their hand on the pulse. It was so interesting to me that like within 1 year, that premium went up so high, so fast. Right. It's like same coverage.
And again, when
inflation?
Inflation a little bit. Inflation is part of it, but the underwriting that goes into different group sizes. So in the small group market, the 2 to 50 life segment, the way that is rated is not the same as if you were 50 plus, because 50 plus your increases should be based on your merit, right? Because based on your claims utilization. That's not the case. I mean, you could have gone all year without doing something, but in your particular zip code in the small group segment, if there was high utilization, that's it's not on your own merit. It is on the claims utilization for that entire small group population in that area.
So that goes to the definition again of insurance. Like if it was a true insurance plan, that would be the case, right? You basically take a population of people in a certain area or a certain group, and you figure out what the total costs were going to be for that, and then you would divide that up. In a perfect world, that would be insurance because your group is covering all the bills. But that's not the way it works now, right? That's the managed care market, where it's like they can segment. This is how insurance companies make money. Numbers don't lie, but they certainly are able to be manipulated.
Yeah, the numbers are sometimes, but no, but again, utilization plays a part in it. But it's also true that it costs a little bit more in the small group arena to insure in Dallas than does say in Gainesville, for example, because that might be Wichita Falls or some place that's less part of the metro market. A rural market, it costs a little bit less because you would think it would cost more because there's fewer providers, but the rating factor is actually lower in non-metro markets just by a small amount because hospitals charge more here, doctors charge more here, rent is more here. Everything factors into those costs, and so therefore, you have different rating areas. So if we rated your company in some little tiny town in West Texas versus Dallas, it's a very good chance it might be a little bit lower cost.
That is so true. I mean, we're talking a matter of 20, 30 mile difference and a substantial and we're just talking about the marketplace. I literally saw it with a couple of people that I was helping out with the marketplace, and the difference in the credit that they were getting and the difference of the cost of the plan just in like a 30-mile radius was so striking.
Yeah,
You couldn't believe the difference.
So area does play a factor. It's not always just how sick are you or how much are you using. Where do you live? What's your age? So they have, again, particularly in the marketplace, the younger you are, even though it's outrageous, it's still less expensive than if you're my age. So,
oh, that's great. That's great. Well, I do appreciate. If someone were to get in touch with you, if they wanted to figure out whether or not their small business was ready for health insurance, how would they get in touch with you?
You can just contact us at. We have a website, www.ebainsure.com or 405-310-2040. So,
Good.
Thank you so much.
Yeah, thanks for coming out.
Appreciate the opportunity.
All right, take care.
Thanks.